Hi, this is Supriyo. I know it's very difficult to sit down to study at this point of time, but still, I believe that we need to keep ourselves occupied. We need to do something, right? So, studies is the best thing that can take your mind away from the crisis that we are going through. And if you're still having problems, I have created a recent video on the coronavirus and 5 tips that students can follow so that they are able to focus a little bit better on their studies. So if you want, you can check it out here. So 21 days lockdown has been declared right now, and this is the best time that you can use to develop yourself, I believe. And that's what I want to encourage you to do. Just try to develop yourself through this video, in which we are going to talk about the RBI news and all the RBI current affairs of December 2019 and January 2020. So let's try and get some studies done. Let's hope for a better future that is to come. We will all stay strong during these 21 days, and we will come out into a resurgent and a new India, which will be virus free and free from worries. So with this resolution, let's begin the video. And if you want, you can join my Telegram group. So it's a group where we try and share interesting ideas, PDFs and all study related things. Go to Telegram app and search for RBI. Just type that in and you'll find that group. So let's meet over there. So in this video, I will be covering all the RBI news from December 2019 to January 2020. So all the RBI related current affairs and all kinds of RBI news I will be covering. And I initially thought of making this an MCQ, but MCQs will not give you the depth that I am about to give you in this video. I will be discussing each and every aspect so that you can note the finer details as well, and that would not be easily done via an MCQ. So let's begin and let's see what are the RBI news items. So the first thing is RBI released guidelines for on-tap licensing of SFBs, which are small finance banks in the private sector. So on-tap licensing, what does this mean? This means that the license is available to the company whenever they come and ask for it. So you might have heard about on-tap licensing for banks. So right now what RBI does, they go ahead and tell the people who are interested to set up banks that you can come to us whenever you feel ready, and we will be issuing the licenses on an on-tap basis. And this is the same thing that they are going to follow for the small finance banks. So right now we have 10 small finance banks operating in India. So there are a lot of small finance banks like Janica Small Finance Bank, Ujjivan Small Finance Bank, etc. etc. You can find the names online. So there are 10 of them right now which are licensed by RBI. And in this on-tap licensing, RBI essentially told people that you can come and approach us if you feel that you can operate a small finance bank. Now, what are the caveats? So the various things you need to remember are that the minimum paid up voting equity capital, or the minimum net worth that the company must have before it can go ahead and set up its small finance bank, it is 200 crore rupees. So any entity which wishes to set up the SFB must have a minimum paid up voting equity capital of 200 crore rupees. And now what if the UCBs want to become SFBs? Now UCBs, what are UCBs? They are urban cooperative banks. So if urban cooperative banks want to become SFBs, the initial net worth needed will be 100 crore rupees. So initially those UCBs must have 100 crore rupees, but they must increase their net worth to 200 crores within 5 years of commencement of business. So after 5 years of commencement of business as an SFB, they must increase their net worth to 200 crore rupees. And SFBs will be given scheduled bank status. So they are going to be put in the second schedule of the RBI Act, the scheduled bank status. And so what if the payment banks, now PBs, so if the payment banks want to become SFBs or the small finance banks, they need to operate for 5 years before they are eligible to become small finance banks. So that is a requirement for the payment banks only. So that's all about the on-tap licensing arrangement of the small finance banks. let's go to the next one. So this is the very important news item because DHFL has become the first financial services firm to be taken to NCLT, the National Company Law Tribunal, by the RBI. So this is done for the insolvency proceedings. As you know, they have been referred under the IBC or the IBC 2016, the Insolvency and Bankruptcy Code. So DHFL, this is the Diwan Housing Finance Corporation Limited. So remember the abbreviation is very important. And RBI has referred the DFHL to the NCLT for insolvency proceedings, making it the first FSP, which is the financial services provider, to go to NCLT for a possible debt resolution. So FSP, full form of FSP is financial services provider. You must also remember the full form. So financial services providers, they have a separate arrangement for going to the NCLT. So the National Company Law Tribunal. So basically under the IBC, if there are any insolvency proceedings for the other companies, they can directly go ahead and approach the tribunal. But unlike the insolvency proceedings for companies from other sectors, an FSP, so what is the FSP? It is the financial services provider. An FSP creditor or debtor cannot approach the tribunal directly. The firm has to be referred by a regulator. So unless and until the regulator refers the firm to the NCLT, they cannot go ahead and approach them. So RBI, being the regulator of the financial services industry, has gone ahead and approached the NCLT, told it that DHFL is going to be taken to the NCLT. And these are basically the new powers that RBI had been given in the union budget for the regulation of the FSPs. So new powers of RBI also allow it to take administrative control of private FSPs, remove auditors, call for audits, etc., etc. So these are the essential powers that have been included in the RBI to go ahead and refer these firms and have a lot of administrative control over many aspects of it. So remember these things. Okay, let's move to the third item. So the fifth bi-monthly monetary policy committee meeting, the MPC meeting, has been concluded. Okay, so before we start off with this, remember that the sixth bi-monthly MPC meeting has also been completed. So it was actually completed very recently, and for the sixth MPC meeting, I have prepared a complete analysis of that MPC meeting, and I'll leave the link up top so that you can go ahead and check. And it's a very informative video that you must watch if you want to get informed about the MPC and all its proceedings, all its latest proceedings. So the fifth policy meeting, this is not so much important right now because we have had the sixth one, but still I have included because the repo rate at that point of time was unchanged at 5.15%, and even after the sixth meeting they have kept it unchanged at 5.15%, and reverse repo has been unchanged at 4.9%. So even now it has been remained unchanged at 4.9% after the sixth meeting. So since these two things are the same, I have included. And also another important thing was there, that on the PMC Bank issue, so as you know, the PMC Bank, it was under a lot of crisis right now, and so many people who were affected because of that crisis. And because of this PMC Bank crisis, RBI has had a stern look on the cooperative banking regulation aspects. So many of the things that we are going to cover in this video as well, cooperative banks are involved in those news items just because of this PMC Bank crisis that had happened. So for this, RBI had assured citizens that valuers are assessing realizable value of assets identified by the ED and the Economic Offences Wing. So the ED is the Enforcement Directorate and Economic Offences Wing. So the RBI had assured all the citizens that valuers are looking into it, and people will be getting their money back as much as possible, as much as they can realize out of those assets. So that is why it is very important to cover. So let's move over to the fourth thing. So annual report of RBI 2018-19 revealed that the risk of duplication of rupees 500 and rupees 2000 notes are higher. So what was the thing that they had revealed over there? And before that, just remember that the RBI financial year, it starts in July and ends on 30th June. So that is very important. They have a financial year July to June. And recently, because of the coronavirus crisis, the financial year of the RBI, it's going to start at July 2020 and it's going to end on March 31st, 2021. So that is a very important thing that you must remember. Okay, let's look into this. So the counterfeiting of the newly designed 500 notes, it has shot up by 121% in 2018-19. Counterfeiting of the newly designed 2000 rupees notes have shot up by 21.9% in 2018-19. So these two figures are very important because the counterfeiting percentages have directly been just given by the RBI. And another important thing is 94.4% of the FICNs. So what are FICNs? They are fake Indian currency notes. So all those counterfeit notes, they were detected by the banks. The rest of the percentage was detected by the RBI. So that's all about this news item. Let's move over to the fifth one. So the first round of Operation Twist was conducted by RBI in December 2019. Now, what is Operation Twist? I have made an entire video explaining this very thing, Operation Twist. So you can go up and you can check that video if you want. So you will get to know each and every single detail about the Operation Twist, and it is very, very important for all banking aspirants. And so let's go ahead and read into the first round. So in December 2019, RBI for the first time conducted Operation Twist. So the first time it was conducted in December. Amount of OMOs for this operation was 10,000 crores. So the first round, it happened on 23rd December 2019. Second round was on 30th December 2019, and the third round was on 6th January 2020. So 3 rounds of Operation Twist, and everything has been covered in the video that I told you about. So go ahead and watch it if you want to know all about Operation Twist. So let's move ahead into point number 6. So on December 27, 2019, RBI released biennial financial stability report. Now, what is biennial? So that is also very important. So biennial, this biennial means that it is released once every 2 years. So this report, it is released only once per 2 years. So the key highlights of this report. So the SEBI credit growth remains subdued at 8.7% in September 2019. SCB means scheduled commercial banks. So the credit growth of all the scheduled commercial banks, it is at 8.7%. So it is quite subdued at that point of time, September 2019. The another thing is bank NPAs will be rising to 9.9% by September 2020. So the gross NPAs are going to rise to 9.9% by September 2020. It's a very important thing that you must remember. So all these figures that I am telling, just make a note of all of these figures because they can anytime be asked in any competitive examination. And the PCR has increased to 61.5% in September 2019. Now what is PCR? PCR is the provisioning coverage ratio. So provisioning coverage ratio, this is basically the ratio between the provisions that have been made by the bank and the denominator has all the bad loans. So how much provisions has the bank made out of all of the bad loans? So that the percentage is 61.5% in September 2019. The CRAR has improved to 15.1% in September 2019. Very, very important, this percentage. And what is CRAR? It is the capital to risk weighted assets ratio. So CRAR is a very, very important tool that is actually introduced in Basel III, and each and every bank needs to have a minimum amount of CRAR. So what is the minimum amount prescribed by RBI? The RBI prescribes CRAR of 9%. And internationally, what is the figure? Internationally, CRAR required by international banks is 8%. So remember all of these important details. So the next thing is the frauds. So frauds reported by banks touched an all-time high of over rupees 1.13 lakh crore in the first half of the financial year 2020. So the half yearly, the first half of FY20, we had the highest amount of the bank frauds that were reported, 1.13 lakh crore. So this is also a very important figure. So just note
all these important figures. That would be all from the financial stability report. The seventh thing, so RBI brings large cooperative banks under CRILC reporting framework. So what is the CRILC? So it is the Central Repository of Information on Large Credits. So this is the full form of CRILC. So all the aggregate exposures that a bank has of rupees 5 crore and more, so these amounts, they must be just reported to the CRILC. So if the exposure is rupees 5 crore or more, then you have to report it to the CRILC. So that is the norm that was followed by the banks, and now the large cooperative banks are also going to follow it. So what are the large cooperative banks? They are the primary cooperative banks or the urban cooperative banks, which we call the UCBs, which have a total asset of rupees 500 crore and above as on 31st March of previous financial year, which are included in the CRILC reporting framework. So total assets of 500 crore and above as on 31st March of previous financial year. So these banks, they must go ahead and report under CRILC, and this reports, all of them must also mention the SMA 0, SMA 1 and SMA 2 classification that we have under the IRAC norms. So income recognition and asset classification. So various norms that we follow to report the NPAs. Now SMA 0, what does that mean? It means that the principal or the interest is overdue for a period of 1 to 30 days. So if the account is NPA for 1 to 30 days, you go ahead and report it under SMA 0. For SMA 1, it has to be 31 to 60 days of default. So SMA 1, and SMA 2 is 61 to 90 days. So these default that I am talking about, it is basically when the principal or the interest is not paid back, and even if it is partially not paid back, then also you have to go ahead and report it under the SMA. SMA stands for special mention account. So it's very important, just make a note of it. The next thing is that the reporting frequency of the CRILC UCB's return is currently on quarterly basis. So the reporting frequency for the CRILC report, it has to be on quarterly basis. Okay, let's move ahead to the next thing. So RBI launches money application for visually challenged persons. So what is this money application? Money means mobile aided note identifier. So that is the full form. Make a note of it, very important. So this actually covers the new currency notes which were launched after demonetization. So all those notes, the visually impaired people can now go ahead and recognize those. So how can they do it? The app, it will help them. It will scan the notes with a camera and it gives audio output in English or Hindi. So in English or Hindi, it will tell which note that person is holding, and it cannot actually check if the note is genuine or counterfeit. So that is a very big problem right now. So you cannot check whether it is genuine or counterfeit, but it can tell you what note it is actually. And another way by which the visually impaired people are helped actually in these kinds of situations is by the intaglio print. So these are the raised shapes which are present in all notes except 10 rupees notes. So they can actually also help the visually impaired people. So let's move ahead to the ninth point. India's forex reserves cross $450 billion for the first time. So our forex reserves, they have touched an all-time high of $457.468 billion in the week ended 27th December 2019. Now please understand that these forex reserves, they actually always keep on fluctuating. So there is not any kind of steady figure that you can memorize. Just remember this $457 billion figure, because it was very important. First time we crossed $450 billion, and every week RBI on its website is going to update the forex reserves. So just before your examination, go ahead and have a look at the latest forex reserves that they have updated. So it's not very important to note each and every single figure. Just have a general idea about the quantum, like above 450 billion, like these kinds of things. And so the next thing is that India's forex reserves. So what is the composition of the forex reserves? So forex reserves, they have FCAs, which are the foreign currency assets, gold. Then they have the SDRs, which are the special drawing rights. So this is basically a type of currency, you can say, for the IMF. And we also have the RTP with the IMF, which is the reverse tranche position with the IMF. Now, explanation of all of these things, it will take a long time, so I'm not going deep into it. Later on a later video, we'll go ahead and cover all of these things. So let's move ahead into the next thing. So point number 10, RBI has announced that the NEFT system, the National Electronic Funds Transfer System, will now be available 24/7. So earlier we used to have a limited time for the NEFT systems, and right now we have 24/7 NEFT. So this started from December 16, 2019, and from January 1, 2020, it was declared to be free of all charges. So right now, if you go ahead and make a NEFT transaction in your bank, I hope that the bank is not cutting any charges, because RBI has said that it will be free from January 1, 2020. And in these special circumstances, like now we are dealing with the coronavirus, it's very important that all these useless charges are not cut. So right now, as you have seen, that the minimum balance charges have been waived off, the different ATM usage charges have been waived off. So those are the important things that the government has done, and this NEFT thing was done way back. And so remember this thing, that there will be 48 daily half hourly batches. First batch will start at 12:30 and last at 12. And NEFT transaction after the usual banking hours of the banks will be automated transactions initiated through STP. This is straight through processing mode. So this is the important thing that you need to remember. Details are not required. The member banks will ensure sending of positive confirmation message. So this is the N10 message. So this is the N10 message in the RBI systems for all the NEFT credits. And how these things actually happen, it's actually the banks, they have current accounts that they maintain with the RBI, and that those accounts are actually credited or debited by the RBI. So that is how this NEFT and the RTGS things are actually taking place. We'll go ahead and look into it a little bit later. So earlier, crediting or returning of transactions was done within 2 hours of settlement of respective batch, and even now the same thing will be there. So within 2 hours, you either have to credit the amount to the beneficiary, or if there are some errors, you have to return the transaction back to the person who is sending it. So this directive, it has been issued under sections 10(2) and section 18 of the PSS Act, the Payment and Settlement Systems Act 2007. So remember the act under which it was actually done. So let's move over to the next thing. So this is again a conjunction with the RBI announcement of the 24/7 NEFT systems. So basically they announced a liquidity support or LS facility for NEFT 24/7. So what is this exactly? So this will actually help in the smooth settlement of NEFT transactions among member banks, and RBI will provide an additional collateralized intraday liquidity facility to be called liquidity support. So this is a collateralized intraday liquidity facility, and this is something that is similar to the IDL facility, which is the intraday liquidity facility, which the RBI grants to RTGS members for settlement of their payment transactions in the RTGS to overcome short-term requirements for funds during the RTGS business day. So RTGS people, the RTGS banks who are actually involved in RTGS, they have something called intraday liquidity IDL facility, and this LS facility, it will actually be on the same lines. And remember that IDL is a repo facility, so LS also we are going to get in the same kind of a facility. And outstanding drawings at the end of the day under LS facility will be automatically converted into borrowing under MSF. So MSF is the marginal standing facility. So under MSF, these will be automatically converted. So this is how the RBI is going to classify these kinds of borrowings, and all banks eligible for IDL facility will get the LS facility as well, and LS limits will be set by the RBI. So these are the salient points for the liquidity support facility. This will actually help the NEFT system become a 24/7 operational system. So this is very important. Let's move over to number 12. So RBI caps aggregate exposure of a lender to all borrowers across P2P platforms. So what is P2P? It is peer-to-peer. So peer-to-peer lending, as we know that RBI had recently regulated the peer-to-peer lending, and now NBFC P2P we have. So P2Ps get an NBFC license to undergo their business, and RBI now stated that at any given point of time across all P2P platforms, aggregate exposure of a lender has to be capped at 50 lakh rupees, provided that such investments of the lenders on P2P platforms are consistent with their net worth. So each and every individual investor, that investor can have a maximum of 50 lakhs across all P2P platforms. So above 50 lakhs, you cannot go ahead and lend across all of the P2P platforms all over India. And the lender which is going to invest greater than 10 lakh rupees across P2P platforms must produce a certificate to these platforms from a practicing chartered accountant certifying minimum net worth of 50 lakh rupees. So the minimum net worth requirement that the RBI has actually capped them at, so the minimum net worth, it has to be certified by a CA that they have 50 lakhs minimum. Another important thing is that escrow accounts to be operated by bank promoted trustee for transfer of funds need not be maintained with the bank which has promoted the trustee. So any other kind of with any other kind of bank also, you can go ahead and maintain those escrow accounts. So remember that whenever the P2P transaction is taking place, there is an escrow account involved, because directly you cannot go ahead and give the lender and the borrower the direct access to their accounts. So we have an intermediary account, escrow account. So that is actually helping to facilitate these transactions. Let's go to number 13. So setting up of IFSC banking units, IBUs, permissible activities. So IBUs, some regulations regarding IBUs, IFSC banking units. So RBI is going to impose no limit on raising short-term liabilities from the banks. So if the IBUs want to take loans from the banks, go for it. There is no kind of limit for that. LCR is applicable, however, to the IBUs, just like the Indian banks, the scheduled commercial banks. So LCR is the liquidity coverage ratio, as we know under Basel III, and LCR, how much is the minimum stipulation? It is 100% LCR. So 100% of high quality liquid assets, HQLA. So LCR, we won't go into much depth into it. Later on, I'll make a video on the Basel norms, so you'll get a good picture on that. NSFR is also something related to the Basel III. So net stable funding ratio, this also the minimum is 100%. So just remember the abbreviations and the minimum. This is also applicable to IBUs. IBUs cannot open savings account. So they cannot open savings account, very important. They can open fixed deposits in foreign currency of lesser than 1 year tenor from non-bank entities. So this is very important. From non-bank entities, you can go ahead and open fixed deposits for less than 1 year tenor. They can also open foreign currency current account of units operating in the IFSC, the International Financial Services Center, and of non-resident institutional investors. So this is also quite important. And they cannot raise liabilities from retail customers. So retail customers, they cannot go ahead and park their funds with the IBUs. So even the HNIs, they cannot go ahead and park their excess funds over there. So no liabilities from retail customers. And they cannot offer check facility. So checks are not given by the IBUs. It's totally prohibited. So only bank transfers are allowed, because usually in IBUs it will be international banking transactions and everybody can go ahead and do it via a bank. There is no need for a check in these kinds of banking units. So strict KYC, CFT, combating of financial terrorism, and AML, anti-money laundering regulations need to be followed. So let's go to number 14. RBI introduces new semi-closed PPI, Prepaid payment instruments. So PPIs, what are PPIs? So various kinds of PPIs we know which are very famous, like Paytm, MobiKwik. So these are all semi-closed kind of PPIs, and there are three types actually of PPIs. There are semi-closed, there are closed, and there are also open PPIs. So this new PPI, it is a semi-closed type of PPI that the RBI has introduced, and they can only be used for transactions of goods and services up to 10,000 rupees. So maximum limit is 10,000 rupees, and they can use it only for goods and services transactions. They cannot use it for fund transfers. No fund transfers with these new PPIs. So amount loaded in such PPIs during any month cannot exceed 10,000 rupees. That's a no-brainer. And total amount loaded during the financial year cannot exceed 1,20,000. So 12 into 10,000, they calculated 1,20,000, and they went ahead and put that limit. And it is issued by a bank or non-bank after getting minimum details of PPI holder. So minimum details like KYC and all of those things need to be accepted, and then you can go ahead and issue those. These PPIs can only be loaded using the bank account. So can you understand, like RBI is focusing on the digital methods so much, like they are trying to get people to use their bank accounts. So PPIs can only be loaded using a bank account. So no kinds of using of just cash to load those PPIs is allowed. So the amount outstanding at any point of time in such PPIs shall not exceed 10,000 rupees. So this is also quite clear, because 10,000 is the limit. Let's move to number 15. So assignment of UTLBC convenership by RBI for the new territories, union territories of Jammu and Kashmir and Ladakh. So because they have now become different union territories, so UTLBC, what is this? This is the Union Territory Level Bankers Committee. So there are two types of things basically. There is the SLBC and there is the UTLBC. So SLBC stands for the State Level Banking State Level Bankers Committee, and UTLBC is the Union Territory Level Bankers Committee. So they play a very important role in coordinating and supervising developmental efforts of government agencies and banks in the states or union territories. So all the developmental efforts they help in. And this UTLBC convenership of the Union Territory of Jammu and Kashmir has been assigned to Jammu and Kashmir Bank Limited. So for Jammu and Kashmir, it is Jammu and Kashmir Bank Limited, and the Union Territory of Ladakh is assigned to State Bank of India. So for Ladakh, they have mentioned it as State Bank of India. So these are the important banks that you must remember in this. Let's move over to the next thing. So Finance Ministry with RBI has announced waiving off of the merchant discount rate, the MDR. So earlier also we had a lot of stipulations regarding this, and right now it will be waived off for businesses with over 50 crore annual revenues from January 1st 2020. So this is totally waived off, and the waiver is for Rupee, Bharat QR and Bhim UPI payments. So this was actually mentioned in the union budget actually by Nirmala Sitharaman, and right now for these kinds of digital payments, the MDR or the merchant discount rate is totally waived off. So this is something that is going to impact the banks, right? Because the banks would be earning money through the MDR. So the banks asked the government for compensation, and the government have assured them that the RBI would bear the cost of 1,800 crores needed to fund the free transactions. So all of the excess compensation, it will be borne by the RBI. Let's move to the next thing. Constitution of Board of Management BOM in primary or urban cooperative banks, UCBs. So now the UCBs need to form Board of Management. So is it for every UCB? No. Only the UCBs with a deposit base of greater than 100 crores, for them the Board of Management is mandatory. So for all UCBs it is not mandatory, only for those with deposit base greater than or equal to 100 crore rupees. And importantly, the Board of Management, it will be constituted by the Board of Directors, the BOD, and they must comprise fit and proper individuals with expertise, track record and integrity in banking related activities. So they must be very good individuals that are selected to be in that Board of Management. And UCBs with deposit base greater than 100 crore will require prior approval of RBI for appointment of their CEOs. So even for the appointment of the CEOs, they must go ahead and take an approval from RBI. So all of these things that you see for the UCBs, you will find lot of new things that are coming up for the UCBs. This is all due to the PMC Bank crisis, the Punjab and Maharashtra Cooperative Bank crisis. So the PMC Bank crisis, it has actually jolted the RBI, and they really want to fix things, and that is why so many different kinds of things you can see at this point of time targeting the UCBs. So the next thing, so NAFCUB receives RBI approval to set up an umbrella organization as NBFC ND. So NAFCUB full form is National Federation of Urban Cooperative Banks and Credit Societies. Very important. And RBI has approved it to set up an umbrella organization as a non-deposit taking NBFC ND to strengthen the UCBs. So again we come to the strengthening of the UCBs. RBI is really worried about UCBs, and they are pulling out all the stops to try and fix these problems. So it will provide the liquidity support and also IT infrastructure to the UCBs. So that is also something that the NAFCUB will be helping with the UCBs. So remember this very important thing. And the next thing, so Supervisory Action Framework SAF for primary or urban cooperative banks. So again another new thing for UCBs, which is the SAF, the Supervisory Action Framework. So basically this actually used to be there, but it was not enforced so much, and you can think of the SAF framework as something like the PCA framework that we have for the scheduled commercial banks, the prompt corrective action thing. So that is something that can be analogous to the SAF. So SAF for the UCBs will expedite resolution of UCBs experiencing stress like PCA does for the SEBs, just like I told you. So three pillars which can come into the SAF. So three pillars are the asset quality. So if the net NPA of a UCB exceeds 6% of its net advances, then it can come under the Supervisory Action Framework or the SAF. Again, another thing is profitability. So asset quality we saw. Profitability, if it incurs losses for 2 consecutive financial years or has accumulated losses on its balance sheet, then also it can come into the SAF. Again, CARAR. So if the capital to risk weighted assets ratio falls below 9%, then also your UCB can be pulled up for the SAF. So remember these three things, very important, how we can go ahead and classify them into SAF. Now if a UCB comes under SAF, there will be restrictions on the UCB on the basis of their financial position. So various kinds of restrictions, we do not need to go deep into detail with it. Like there will be various kinds of restrictions by the RBI, and the RBI will have some administrative control also on those UCBs. So all inclusive directions under section 35A of the Banking Regulation Act 1949 or even cancellation of banking license can be invoked by RBI based on the situation. So can you believe that even that high amount of thing can be done by the RBI? So let's move ahead to the next item. So number 20, RBI allows 24/7 forex market operations via select banks. So select banks, they have been empowered by the RBI to offer 24/7 trading in the Indian rupee to allow Indians to hedge forex risks at any time. So Indians can now go ahead and hedge their forex risks at any time. Hedging means basically protecting against the downside. So interbank market hours, which now run from 9 AM to 5 PM, even beyond these hours, you can go ahead and allow the forex market to operate. And this will actually help the NRIs who were actually trying to go to the other markets. They will stay in the Indian market and they will transact. So this will actually deepen our forex market. And the AD category 1 banks, the authorized dealer category 1 banks, these will be chosen for this system. They can offer this via domestic sales teams or through overseas branches. So domestic sales teams or overseas branches, whatever the banks choose, they can go ahead and implement it. So that's all. And the next thing is 21, Shivalik Mercantile Cooperative Bank granted approval to become an SFB, a small finance bank. So this is a voluntary scheme for the assumption of a UCB into an SFB. So this was a norm that was earlier used by the RBI, and now they have granted in principle approval to Shivalik Mercantile Cooperative Bank for transition into an SFB. And this approval, it is valid for 18 months, after which the SFB will commence operations if all the conditions are met by the mercantile cooperative bank. So if everything is all clear, then after 18 months they can go ahead and they can start their operations. Next thing, RBI released National Strategy for Financial Inclusion NSFI 2019 to 2024. So there are 6 pillars of NSFI, very important. You must note all of these pillars and you must remember them. Universal access to financial services, so everybody gets access. Providing basic bouquet of financial services, so the basic transactional and the deposit and the loan services, those financial services must be provided to everybody. Access to livelihood and skill development, very important in the rural areas. Financial literacy and education, very important. Customer protection and grievance redressal, so any kind of wrongdoings by the banks, they can be arrested by these things. Effective coordination, this is the 6th one. So very important, these 6 pillars of the NSFI. Now another very important thing that was mentioned in this document, so effectively a 5-year plan for financial inclusion, and in this the RBI says that you have to provide banking service within a 5-kilometer radius to every village or 500 households hamlet in the hilly areas by March 2020. By March 2024, every adult to have access to a financial service provider via mobile. This is also very important. PCR must be fully operational by March 2022. So PCR is the public credit registry that was in the news a lot. So public credit registry will actually help to understand the borrowing habits of everybody, and then the financial service providers can use that data and they can actually give out loans to the correct individuals. And every willing adult who has been enrolled under the PMJDY must be enrolled in an insurance and pension scheme by March 2020. So the RBI also wants that insurance and pension schemes can go ahead and reach into every willing adult so that they can all be covered. It's a very important thing and it will help in financial inclusion. So the next thing, RBI cancels license of Vodafone M-Pesa. So RBI cancelled the certificate of authorization of Vodafone M-Pesa after its voluntary surrender of authorization. So it has voluntarily surrendered. The company cannot transact business of issuance and operation of PPIs anymore. And very important, customers or merchants having a valid claim as a PSO, which is a payment system operator, can approach it for settlement of claims within 3 years. So by 2022 they can approach it for settlement of claims. Vodafone M-Pesa was a PSO, so it was a payment service operator, and the PSOs, very important thing that was mentioned by the RBI a few months back is that PSOs must store entire payment data in systems located in India only. So data localization norms were actually implemented. So this is also a very important thing just to note regarding the PSOs. Next thing, RBI appointed the Executive Director Janak Raj as a member of the Monetary Policy Committee. So why was Janak Raj actually appointed? Because he will be replacing Michael D. Patra as a member of the Monetary Policy Committee. So as you all know, Dr. Michael Debabrata Patra took over as the 4th Deputy Governor of RBI. So who are the 4 Deputy Governors of RBI? There is N.S. Vishwanathan, there is Michael D. Patra, there is B.P. Kanungo, and there is M.K. Jain. So these 4 names are very important to remember. Also remember the name of the governor, Shaktikanta Das, very important. And so this person, Michael D. Patra, he is going to fill in the vacancy left behind by Dr. Viral Acharya's exit last year. So this is very important and a highly important news. So let's go to the 25th item. So RBI notified Exim Banks Government of India supported LOCs or lines of credit. Now what I have done here is RBI goes ahead and notifies all of these Exim Banks LOCs periodically. So I have taken all of them together and presented to you in one picture. So LOC, these are lines of credit which are actually supported by the Government of India. So the funding comes from Government of India. Exim Bank goes ahead and provides these kinds of loans, you can say loans, to foreign governments, and what happens is this actually helps us to exert our soft power, and also our local firms are getting precedence in these kinds of things, because we always stipulate that some percentage has to be brought in by sellers from India. So for example, see that LOC of $500 million has been provided to Bangladesh, line of credit of $500 million for defense related procurements, and here the government has said that 75% must be from an Indian seller and 25% can be outside of India. Indian percentage can be lowered to 65% on a case to case basis. Similarly, LOC of $19.5 million has been given to Zimbabwe for upgradation of phase 2 of Deka pumping station and river intake system. 65% has to be from seller in India. LOC of $23 million for renovation of or upgradation of Bulawayo thermal power plant in Zimbabwe has also been provided. So here 75% must be from a seller from India. LOC of $75 million for installation of 75 megawatt photovoltaic solar parks in Cuba have also been announced, and 75% again has to be from an Indian seller. So these are very important to note that what the Exim Bank is going ahead and doing with the different countries, and how the government of India is actually helping to get our exports into those countries as well by this arrangement. So the next thing, RBI norms on acquisition of financial assets by asset reconstruction companies. So ARCs, they shall not acquire financial assets on bilateral basis from the following. From what? Bank or FI, which is the sponsor of the ARC, bank or FI, which is either a lender to the ARC or a subscriber to the fund, if any, raised by the ARC for its operations, an entity in the group to which the ARC belongs. So 3 categories. From these, they cannot acquire financial assets. They are, however, allowed to participate in auctions of financial assets conducted in a transparent manner on arm's length basis, and the prices are determined by the market forces. So this is also very important thing that you must note. The next thing is, to manage operational risk, RBI introduces a price or yield setting in eKuber. So this is not a very important news item, but you must know that there are some errors like fat finger errors or big figure errors which can cause financial loss to bidders. So sometimes they might press the button too much and the number of zeros can be added, and so this can cause a financial loss to the bidders in those government security GSEC auctions. So the new price or yield setting, it allows a participant to define a range. So the range can be set in either price or yield terms for each security, and every auction which can be set before the auction and can also be modified during the auction. So it is helpful for risk management for market participants in the GSEC auctions. So this is a little bit higher level thing, so it might not be asked in the exam. You just have to note that this was done in the eKuber, and remember that eKuber, it is the CBS of RBI, so the core banking solution that is provided by RBI. Let's go to 28. So RBI has published a master circular on direct tax collection, which is OLTAS. So what is OLTAS? It is the online tax accounting system. 35 circulars have been consolidated, and now you must also know what the OLTAS is actually. So it was introduced in 2004 for collection, accounting and reporting of the receipts and payments of direct taxes online through a network of bank branches. It covers the income taxes and the corporate taxes, so basically the direct taxes, and the taxpayers' data flows directly from the banks to the tax information network, which is the TIN. TIN is set up and maintained by NSDL, which is the National Securities Depository Limited. So NSDL is going to maintain it, and CBDT, the Central Board of Direct Taxes, they administer all direct taxes through income tax commissioners located across different parts of India. So CBDT is the nodal agency. It is going to administer everything. And importantly, remember that proof of tax payment is the CIN, which is the Challan Identification Number. So a CIN number is actually given to each taxpayer. So once you have paid the tax at any bank or anywhere, you are giving that CIN number, which is actually used in the OLTAS system. Very important. So let's go to the next one. RBI enhanced facilitation of National Electronic Toll Collection NETC system. So NETC system, it allows linkages of FASTags with the bank accounts like savings or current accounts, and also prepaid cards. So now what the RBI says, that all authorized payment systems and instruments like non-bank PPIs, cards, UPI interface shall from now on be permitted for linking with the FASTags, which can be used for various types of payments. So vehicle toll, parking fee, etc, etc. Everything you can go ahead and use these kinds of systems also to link it with the FASTags. So this is a big push to digital India. Next thing, comprehensive cyber security framework for UCBs. Just imagine how much we are focusing on the UCBs. UCBs are very, very important in the current context for the RBI. So the board of directors is going to be ultimately responsible for the information security of the UCB. So the final buck will be stopping with the board of directors. And there are various kinds of levels like level 1, level 2, level 3, level 4. So level 4 is the most stringent, and not all UCBs have to follow it. Level 1 is for all UCBs, and gradually as their deposit base increases, level 2, level 3, level 4, we go like that. So some guidelines, there are implementation of bank specific email domain, two-factor authentication for CBS, periodic security assessment of public facing websites or applications, strengthening the cyber security incident reporting mechanism, strengthening of governance framework, and setting up of security operations center, SOC. This is very important. So these are the kinds of things that they have mentioned in the cyber security framework. And the fifth bi-monthly monetary policy statement 2019-20 had announced the graded approaches. So they had talked about graded approaches, and finally RBI came out with this framework. Let's move to the next one. Cyber security controls for third-party ATM switch application service providers. So again, third-party ATM switch application service providers. So all banks and UCBs and everybody, they must go ahead and have a third-party ATM switch application service provider. So there is a potential that these service providers, they can get hacked. So they also need to have some cyber security controls, right? And there are various kinds of controls. So I'll not go into deep into this. So just remember few important things, that there should be application security lifecycle, ASLC, user access control, audit logs must be there, advanced real-time threat defense, so anti-malware, antivirus, there must be forensics. They have also got to set up some continuous surveillance like cyber security operations center, and they must also comply with IT system standards like PCI DSS, PADSS, etc., etc. So these are some of the things that the third-party people must also follow so that cyber security can be maintained. Let's move to the next thing, the extension of relaxation guidelines to NBFCs on securitization transactions. So originally this was actually announced on November 29, 2018. What was announced? That an NBFCs had been permitted to securitize loans of over 5 years maturity after holding them for 6 months on their books. What does this securitization actually mean? This is something that actually allows any kind of illiquid asset to be actually converted into tradable securities. So securitization is a huge thing, and it is a subject on its own. So we do not need to go jump directly into it right now. Just remember that securitization was one of the key things which actually caused a domino effect, you can say, which led to the global financial crisis. So once I make the video on the global financial crisis, you will understand it better. So it's kind of something that is dealing with the derivatives, and this securitization, so this 6 months that they are talking about, this is called the MHP, or the minimum holding period. So minimum holding period for those loans which are over 5 years maturity, they have been put at 6 months, and this relaxation basically, it is now extended till June 30, 2020. Let's move to the next thing. Reporting of OTC currency derivative transactions to trade repository. So earlier, reporting threshold for OTC currency derivatives, currency swaps, FCY, FRAIRS. So this is foreign currency forward rate agreement and interest rate swaps. So all of these things, it was $1 million. So the reporting threshold was $1 million, but now this threshold has been removed from January 6, 2020. So even below $1 million, you need to go ahead and report to the trade repository. So all outstanding client transactions below $1 million must also be reported by January 31st, 2020. That's the date. And just remember that RBI has designated trade repository functions in India for OTC, foreign exchange and interest rate derivatives to CCIL. So Clearing Corporation of India Limited, that is the entity which is right now working as CCILTR, which is the Trade Repository of India. That is the power that has been given by RBI, and directions issued under section 45W of the RBI Act. So the RBI Act empowers the RBI to go ahead and give these directions. Let's move to the next thing. Financial Benchmark Administrators Reserve Bank Directions 2019. So RBI notified the following benchmarks administered by FBIL, Financial Benchmarks India Limited, as significant benchmarks. So significant benchmarks are the important benchmarks that are very important for our economy. So these benchmarks are MIBOR, which is the overnight Mumbai Interbank outright rate, MIFOR, which is the Mumbai Interbank forward outright rate, USD INR reference rate, treasury bill rates, valuation of government securities, valuation of SDL or the state development notes. So all of these 6 things you must just memorize that these are the significant benchmarks. Let's move to the next thing. So RBI introduced video-based customer identification process or VCIP for KYC. So what is VCIP? It is something that can help the banks or FIs to onboard customers remotely. So they can go ahead and take in customers without having to meet them face to face. So video recording must be stored in a safe and secure manner by the regulated entities and bears the date and time stamp. So latest AI and face matching technologies can be leveraged so that VCIP can be strengthened, and responsibility of customer identification shall rest with the RE. So at the end, the regulated entity has the responsibility. Aadhaar or PAN details must be cross-verified with the issuing authority. So you need to cross-verify that, and live location of the customer, which is geotagging, has to be captured to ensure that the customer is physically present in India. So customer has to be physically present in India so that you can go ahead and do these kinds of VCIPs, and you can go ahead and onboard the customers. So this is a very important new development for the KYCs. Let's move to 36. RBI allows SIP payments through UPI. This is a very important development that SIPs can be registered via UPI now. So the recurring transactions e-mandate can now be set up in UPI. Current limit for UPI SIP is 2000 rupees, and multiple SIPs can be set up over the different days. So the limit is quite low, but you can go ahead and you can set up multiple just SIPs over different days. So that's all about the e-mandate. Let's go to the next thing. RBI announced new norms for penalty on payment system operators. So the monetary penalty, it would vary depending on the impact on account of various factors, and the amount of monetary penalty for contravention shall not exceed rupees 5 lakh or double the amount of contravention, whichever is higher where such amount is quantifiable. So if any kind of quantifiable thing had been done, contravention, then you can have a maximum fine of 5 lakh rupees or double the amount of contravention, whichever is higher. And for non-quantifiable contravention, when you cannot quantify that thing, then the maximum penalty shall be 5 lakh as per contravention. So that's all about the new PSO penalties. Next thing, RBI fines HDFC Bank 1 crore rupees for KYC violation. So this is a very important fine because they had violated KYC norms in 39 accounts which were used for bidding in the initial public offering, IPOs. So this is a very sensitive matter, and that's why the 1 crore penalty was put, and transactions made through these accounts were disproportionate to the declared income and profile of the customers. So I know many bankers out there who go ahead and take these declarations of the income and the profile and the open accounts. So be warned that any kind of transgressions can happen, and RBI can just give huge fines, and sometimes the bank officer must pay a percentage of those fines. So when you are onboarding customers, then please be careful, if you are a banker, that you get a very good declaration of the income and the profile of the customers. Next thing, RBI issues new debit and credit card rules to improve convenience and security. So by default now, the domestic card transactions will be allowed at ATMs and POS terminals for new cards or reissued cards. So only the domestic things will be allowed, and for international or online or card not present or contactless transactions, customers must separately set up services on their end. So they have to go ahead to the bank, they have to request these things, and only then it will be activated. Directions will come into effect from March 16, 2020, and users will have 24/7 access to switch on or off or change all transaction limits via all available channels. So mobile app, internet banking, ATMs, IVR, interactive voice response, everything you can go ahead and use any of these channels and you can switch it on or off. And very important, mandatory alerts will also be there through SMS or email as and when there is any change in the status of the card. So if the bank is not able to just give you an SMS or an email, then you can go ahead and you can put a complaint, because now these things have been made mandatory by the RBI. So this is something that will help the debit and the credit card users. Let's go to item number 40. So RBI allows rupee derivatives to be traded in the IFSCs, the International Finance Service Centers. So it is a boost to the Gift City IFSC, incentives to NRIs to access India's onshore forex markets. So size, maturity and other specifications, it will be decided by the recognized stock exchange in consultation with SEBI. So SEBI and the stock exchange will be deciding that. So these kinds of things, when capital markets are involved or money markets are involved, then SEBI and RBI, both of them have dual regulations and sometimes they have single regulations. So be careful about these things. So remember, very, very important, task force on offshore rupee markets was chaired by Usha Thorat. So Usha Thorat was the head of the task force on offshore rupee markets, and they had recommended introduction of non-deliverable rupee derivatives in IFSCs in a phased manner, starting with exchange traded currency derivatives ETCD, followed by over-the-counter OTC derivatives at a later stage. So Usha Thorat, she was the main chair of this committee, and they had actually recommended that first you go ahead and bring the ETCD, then you go ahead and bring the OTC derivatives. So very, very important how the offshore rupee markets are going to be developed, and IBUs are now allowed to participate in exchange traded currency derivatives on rupee with foreign currency settlement listed on stock exchanges set up at IFSCs. So that is also something that you must note. Next thing, lending against security of single product gold jewelry. So NBFCs can pool gold jewelry from different branches in a district and auction it at any location within the district under these conditions. So two conditions: the first auction has failed. This is one condition. Second is that NBFC shall ensure that all other requirements of the extant directions regarding auction, prior notice, reserve price, arm's length relationship, disclosures, etc. are met. So if these things are met, then you can go ahead and auction it at any location within the district. Number 42 now, RBI increases investment limit for FPIs in government corporate bonds. So currently the short-term investments by an FPI, foreign portfolio investors, should not exceed 20% of the total investment of that FPI in either central government securities or state development notes or corporate bonds. So 20% is the limit, and now this limit has been increased to 30%. Very, very important. And FPI VRR, which is the voluntary retention route, has also been relaxed. So investment cap through VRR has doubled to 1.5 lakh crore. So this is also very important. The voluntary retention route, it has been doubled to 1.5 lakh crore. RBI had introduced VRR in March 2019, which helped FPIs to invest in debt markets in India. So this is also very important. The VRR, it actually helps the FPIs to invest in the debt markets. FPIs are also allowed to invest in exchange traded funds that invest only in debt instruments. So debt ETFs, they can go ahead and invest in those as well. This is also something that you must note. Okay, let's move ahead into our last item for today. This is change of norms for cash withdrawal using points of sale POS terminals. So you need to obtain permission. You used to need to obtain the permission from RBI for this activity, and now this has been dispensed with. So you do not need to obtain any permission for cash withdrawal using POS terminals. So banks may, based on the approval of their board, provide cash withdrawal facility at POS terminals, and these directions are issued under section 10(2) of Payment and Settlement Systems Act 2007. So this has made life a little bit easier for the banks. Now we come to the end of our session on the RBI news, or the RBI Current Affairs as some people call it. So December 2019 and January 2020 I have totally covered. I have gone into very, very much detail. So nothing more than these things are going to be needed for your exams. I hope that you enjoyed this session. If you like this, please leave a like, and please comment down below if I can improve this thing. If you want to see something else, please let me know. I hope that you have learned something from this video and that was beneficial to you. And I'll see you in the next video. Remember, we need to be strong for these 21 days, and we will get through them and we will come out stronger in the end. Jai Hind.